Thank you very much, everybody, for joining us for this session straight after lunch. We are very lucky to have Alan with us from the Monetary Authority of Singapore. Alan heads up the Fintech Infrastructure Office at the MAS, and we invited him to come today to talk a little bit about what's happening and how their thinking is evolving when it comes to digital assets, both at the sort of broad infrastructure approach, what MAS themselves are doing in this area, and really how they see the landscape for regulation of not just cryptocurrencies, but the broader digital asset space over the next 12 to 18 months. So Alan, maybe to kick things off, I guess MAS has often been considered as one of the pioneers of regulation in the digital asset space. There's been a lot of, conflicting interpretations of MAS's position when it comes to digital assets, I think particularly over the last 12 months or so. Given your, experience in this space, could you perhaps share with us some of the sort of founding principles when MAS thinks about digital assets and regulation of them, how they actually approach the space?
Well, first of all, thank you very much, Caroline, and the Chainalysis team for the opportunity to be here. So I think let's just unpack this a bit. If you kind of look at digital asset itself as a broad category, I think it's important to kind of unpack this in maybe 3 layers. One is the asset itself, right, which could span from crypto-native assets to tokenized assets to forms of currencies. And then there's the other layer, which is the infrastructure layer, whether you want to kind of infer on it being a private infrastructure, a private blockchain, a public blockchain infrastructure, or variants of it. And then there's the activity that's involved as well. So activity, infrastructure, and assets. On the activity side, we need to kind of consider whether we are looking at things like investment, whether we are speaking about speculative investments, whether we are speaking about activities that benefit or lead to business transformation, whether it's things like enhance, for example, borrowing and lending, enhance due diligence, for example. So we need to kind of look at how and if some of these activities actually lead to a better outcome for businesses from those lenses. And if we kind of take a look at cryptocurrencies for the matter, I think the view that we have from MAS has been very consistent. Just on cryptocurrencies as itself, we don't view that it is as being at least of today, as a meaningful form of currency. And we've taken a very specific view to say that it's just because of the volatility and the inherent risk of some of these cryptocurrencies, we don't think that it's suitable as an investment asset for retail investment. So again, just looking on those lenses, the activity that's involved, the assets, and also the kind of infrastructure. But if you kind of look at beyond that, if you're looking at, for example, a crypto asset that's being utilized for some activity that supports the real economy, that's a different viewpoint. If you're looking at, for example, an asset that's backed by, for example, securities, that's a different conversation. If you're looking at a stable coin or even a tokenized deposit for the matter, it's a very different kind of instrument. And in itself, there are inherent benefits, but also inherent risks in some of these assets. So I think it's probably good to kind of view this in that lens. And I think from that lens, I hope that we'll be able to appreciate maybe some of the thinking behind it on how we could or seek to balance both the innovation that exists within this space, but also looking at the inherent risk with some of the types of assets, the type of activities, and also the infrastructure that is being deployed on.
I want to touch a little bit on Project Guardian, which you've recently announced, and I think it picks up particularly around the sort of infrastructure layer you've just talked about, but also the activity layer. Could you tell us a little bit about that and what your hopes are for that space?
So Project Guardian was announced, I guess, I think it's about a month now. So the kind of genesis behind Project Guardian, which is really a collective initiative in partnership with the industry, just to tackle this topic of digital assets and DeFi. But before I talk about what Project Guardian is, perhaps it's important to set a context of kind of the motivation why we're looking at this space. If you look at what's going on in the digital asset and DeFi space, if you look at, we'll just talk about the two spectrums. If you look at the private blockchain space, for that matter, for a bit. So there's a lot of activities there, there's developments, there's a lot of investment put into place. But I think what we see with the digital assets that have risen, or tokenization efforts have risen, I think it suffers from a lack of adoption and liquidity that exists, and there are pockets of activities that occur around globally. I think one thing that we would want to address is this idea of fragmented liquidity. How can we bring these efforts together in a cohesive manner? Now, you flip over to the other side. If you look at the public blockchain side of things, from a regulator perspective, and if you kind of look at this holistically as well, there are inherent risks, right? There's concerns about things like being anonymous on the chain. There are concerns about technology risks and various concerns. But if you kind of look at the nature of public and permissionless chains, there are the benefits of it being able to operate or scale very quickly. Adoption is at a much higher pace as compared to what we're seeing on the private blockchain. So if you kind of look at these two kind of approach over here, and you look at the broader theme around what we're trying to do around enabling arguably the future of finance, which is more open, more interoperable, and greater user experience, more efficient financial systems. We bring all these elements together. What we think is helpful is to create a framework for these experimentations to occur, but in a safe and sound manner. And that's the genesis of Project Guardian. And within Project Guardian itself, I guess we are looking at maybe 4 areas, if I could point out some of those areas. One key area that we're looking at is the establishment of an open and interoperable network. So why that's important? That's important because, again, if we want to get scale, we think that's important. And we think that interoperability in this case is one way of looking at it is a multi-chain world, bridges perhaps, but I think it's also about interoperability with the existing financial system. So that's one of the key areas that we are interested to look at. How do we kind of bridge between the two worlds, if you would, TradFi and DeFi world? The other aspect that we are very keen to look at is this topic of asset tokenization. So it's been touted that perhaps there's an ability to bridge between the financial assets of today in a tokenized form. How is that possible? Do we view this as what's the implications from a custody perspective, for example? And also, perhaps there's an opportunity for tokenized deposits, various forms of liability, whether it's from a commercial bank, for example. So that's another area to kind of unpack. The third area is this idea which we term as trust anchors. So how can we reliably and to enable, I guess, participation into a liquidity pool? What can we learn from a risk and compliance perspective, bring it to a DeFi setting? So that's where this idea of trust anchors comes in. And we have kind of looked at the possibility of this concept of verifiable credentials, whereby somebody or institution that's gone through the verification process by a trust anchor will be able to inherit these credentials. And by presenting those credentials, the individual or the institution may be able to participate in a specified liquidity pool. So the fourth area, if I could just end off, is this idea of what I would term as institutional grade DeFi protocol. So what do I mean? So on institutional grade DeFi protocol, I think what is some of the key tenets there. For example, if you look at blockchain projects today, the concern is that these projects are great in the sense it's open source, so you can know what's going on. But there's also, there isn't an existence, for example, of some form of certification or some kind of assurance that these protocols are actually working the way that they've been advertised to work. So there's a lack of assurance on that front. The other aspect is that some of these DeFi networks, there isn't any controls, for example, or to safeguard against things like market manipulation. So there are lack of controls on that front. So if you kind of bring all these different elements together, I would, at least from my perspective, I think it's quite an ambitious effort. You have the safeguards that we want to put in place, you have the decentralized, verifiable credentials in place, and to do this on an open network. So these are different elements that we are considering. And the first pilot is being led by DBS and JP Morgan with MarketNode, looking at secured borrowing and lending with tokenized deposits and bonds. So that's one of the first pilots, but again, the objective of Guardian is to really to test out different scenarios and different pilots. So from our perspective, we'll welcome, I guess, submissions, applications to Project Guardian that covers any of these themes. And the objective is to, where required, I guess, one of the areas that we are looking to kind of enable is through the regulatory sandbox that we have, the FinTech regulatory sandbox, to allow that experimentation to occur within a certain set of boundaries, managing the risks, and then hopefully we have an opportunity to scale this out in a more meaningful manner.
I want to come back to this idea of institutionalized DeFi, institutional grade DeFi, and also trust actors. But maybe before I get there, just the first point you mentioned as Project Guardian is around sort of open, interoperable networks that allow cross-asset, cross-chain exchanges. So it sounds to me at the moment you're sort of focusing on the technical and practical aspects of how does that happen within the digital asset world, but also with traditional finance. From a policy perspective, that also seems to pose some challenges to how we have traditionally, approached this space. We've had a very, securities are governed by a securities regulator, commodities are regulated by a commodities regulator. As we start to facilitate exchanges between those different types of assets, how do you think about sort of the regulator's role and just the framework for how they're organized developing?
Well, Caroline, I think this is an evolving space. Again, there are specific nuances for each of these areas. So going back to the lens again, the activity, the assets, and the infrastructure. So I think if you look at the asset itself, for example, whether it's a capital markets product, for example, there is an existing regulations called the Securities and Futures Act. And if it's a form of payment, for example, we have revised, I guess, an updated Payment Services Act. It's looking at specifically at digital payments token. So I think those are the two elements there. But I think at a broader level, the risk that we are looking at, for example, aspects around things like money laundering risk, technology and cyber risk, these pertain to new forms of financial activity, as much as it would in the past. Of course, some aspects are heightened or reduced. The other thing to kind of consider, I guess, as we look at this space as well is the approach that we have taken is an activity-based approach. And regardless of the size, regardless of the institution or the specific institution itself, the activity, I think, matters. Of course, that has been helpful, at least, to look at some of these new forms of financial services, because it may look different, but it may look different from traditional finance. But as far as activity is concerned, there are some inherent similarities. Perhaps the forms and mediums are different. But I think looking at those specific efforts, for example, I think that will inform us on what the appropriate measures are concerned. But again, this is an evolving space, so I would expect the developments and the thinking behind this to evolve just as much as the products that are evolving in this space. I think we are seeing this evolving on a regular basis. So I think we just need to keep watch on this space, and whether it's going to be a multi-chain, public chain, and the conversation, I think a lot of the conversation is on the technology, but I think equally important on the policy side, I think that's something that we're thinking very deeply about. But also even from a commercial lens, there is the constant review on whether this makes business sense, what's the commercial model for these, what's the right decision-making or governance process for some of these activities. And even if you are looking at some of these assets, what's the legal obligations to the party that's offering these assets? Forget about the regulation for a minute. Just the legal obligations to the individuals, to the investors. I think those are important questions to kind of unpack.
Yeah, I think that kind of not only is the industry evolving, the technology evolving, but the sort of how we approach policy is also going to need to change, almost to the point, I think, of needing a sort of a policy sandbox in and of itself, where we try new approaches to achieve those same policy objectives. Coming now to this question of institutional grade DeFi, verified trust anchors. When you talk about some of these concepts, it sounds like you're thinking about a lot of the, pillars of regulation that we've seen in traditional finance or in CeFi, and bring those into the DeFi space. One of the challenges, purported challenges we often hear in DeFi is, well, there's no body to put these obligations on. And this question of how decentralized is DeFi often, I think is coming up more and more for regulators and internationally. How are you thinking about, where DeFi sits from a regulator's sort of perspective? This sort of idea of decentralization, does it extend also in terms of their ability to meet the regulatory obligations? Is it more about how you access this space? Be interested to have your view.
Yeah, so I think when a lot of the conversations on DeFi, I think recently it's conversation on whether it's centralized, decentralized, is it centralized enough, decentralized enough. I think a better way to look at this space is, are we enabling a more open finance? Are we enabling a better financial system? Because I think that's a bigger question that we need to answer. And this question about decentralization, I think the other aspect to kind of consider is perhaps a better way to look at it is actually accountability. What's the level of accountability? Who is accountable for some of these activities? I think that's a better question to ask. Arguably, in some cases, some activities within to provide financial services, I don't think necessarily it's a bad thing that some parts of these new products are centralized. And I'm guessing that people in the room would agree with me from the viewpoint that it's probably better and more efficient if somebody, a single person does, for example, a particular activity. But other parts of the value chain, for example, there may be arguments, again, on whether that activity is best done in a decentralized manner. So I think it's important to focus on the bigger picture. What are we doing to enable a world that's finance is more accessible to the wider masses, done in a more efficient, maybe safer manner, for example? I think that's a bigger goal that we need to achieve rather than have the conversation on decentralized or not. And then focus on how we mitigate the risks, identify levels of accountability for different services that are being provided.
Beyond DeFi, one of the other kind of sort of hot topics when it comes to digital assets and policies around NFTs. Could you give us any insights on how MAS is thinking about NFTs in the regulatory space?
Yeah, so for NFT, I think it's important to kind of look at it from the actual representation itself, right? Is it a representation of a collectible, or is NFT, for example, giving you certain sets of access that you would not otherwise have? Does it give you a rights, for example, to vote or to access an exclusive, an opportunity to meet somebody that you would not otherwise do? So is it an access card? So I think it's important to kind of look at the different possibilities and the use cases. So it would, from our viewpoint, it would still fall back to the activity that the NFT kind of constitute. And from there, I think the appropriate regulations would then apply. So that's our current view on where NFTs are, from the lens that NFT could be described as a data model or a way of representing whether it's an intangible or tangible asset today.
Can we expect to see guidance along those lines you've just talked about from the MAS when it comes to NFTs?
Yeah, so I think there is an ongoing effort to look at how we can provide clarity, and very much as well, and this is something that we do in conjunction with the industry. So very much, if there are specific inputs in areas where clarity is required, we welcome feedback on that and seek to provide that clarity on how we might go about how you might go about viewing some of these new forms of digital assets, if you would.
Changing tack a little bit, you mentioned earlier financial stability and the implications of digital assets for broader financial stability concerns, not just in Singapore, but globally. Obviously, Singapore has been an important player in those global conversations, particularly the work of the Financial Stability Board, and I think we really saw a big shift in the FSB's approach to the question of financial stability and digital assets earlier this year with their February report, which seemed to mark a change from sort of, we're watching this space, but nothing too much to worry about, keeping an eye on it, we'll see how we go, until we get to February, and we seem to see a real change in tone to, given the growing size of this industry, given its growing interrelationships with traditional finance and with the real economy, this is now something which constitutes a financial stability risk. Is that a fair assessment? And I guess, what next?
Yeah, so if you kind of look at the implications from a financial stability perspective, and if you can look at it from a various lens. One is the exposure, I guess, that traditional financial services have towards the crypto asset itself. Are they exposed? Are they holding it today as part of the reserves, for example? Then there's the other lens, which is the asset itself. For example, stable coins. How are they backed? Are they backed by assets that resides in the traditional financial systems? Are we talking about for example, commercial papers, for example, that's backing stable coins? Are we talking about financial securities, for financial assets like stocks, bonds, for example, that are backing up these digital assets? So taking a look at it from those two lenses, I think it's important to kind of unpack what's the possible, for example, contingent risk that may occur. For example, if there was a rush to do a redemption on a popular stable coin and the underlying asset that was backing it, what's the possible implication to the financial system? So that's something that we need to consider even more closely as the adoption of these digital assets increase. Then the other side of the equation, which is the exposure that maybe a financial institution, a TradFi player, for example, may have access to crypto assets. That's something that we need to consider, whether the same kind of protection that exists today, the same requirements that exist for how we treat liquidity of some of the assets that financial institutions have needs to evolve. So I think those are kind of things that we need to watch out for from both lenses. And I think that's something that, again, will manifest itself depending on the types of assets that have come up. I think so, at least for now, these two worlds are kind of operating quite independently. But if we see that convergence between those two circles or spheres, if you would, then I think some of these broader financial stability risks would increase.
And I think the regulatory community more broadly is, in terms of looking at things like mandatory redemption requirements, for example, when it comes to stablecoins, obviously has an implication for one side of the equation you just mentioned, but also, proposals around prudential requirements for TradFi holding crypto assets. We're also seeing more clarity come out on those from groups like the Basel Committee. Staying at that international level, I guess for the policy and regulatory community globally, where do you see the top 3 priorities for having either international standards or guidance for the digital asset space?
I think there's probably going to be more than 3, but I'll say maybe the top few that comes to mind. I think the ongoing work on money laundering, I think needs to happen. I think the conversation of financial stability is coming up. But I think just the treatment of some of these assets are important. Just getting to a common understanding of the treatment of these assets in and the treatment when it comes to the various areas of risk, whether it's investor protection, for example, and also areas such as market manipulation. I think those are very important areas to kind of unpack as well. So some level of coordination is important. And the fact is that the global, the digital asset economy or the crypto economy is a global economy. It is something that we need to look at cohesively. And it's not something that a single jurisdiction can operate independently. So I think the coordination needs to happen on the various fronts. So I think it's hard to distill down to 3, but I think there are many of these issues that requires the constant coordination, and it's hard to prioritize one versus the other. It needs to be considered cohesively.
Just on that point to close on, when you talk about coordination, are you really thinking more about sort of coherence on policy approaches, or more in terms of implementation, information sharing, exchanging best practices and so forth?
I think that while coordination is important, I think it's also, I'm also mindful that each jurisdictions have their own considerations for what the needs are for the respective jurisdictions. So it's probably not possible for a single one-size-fits-all regulation. Perhaps we can attempt for some of the efforts that we've spoken about, whether it's standardization, for example, a common taxonomy, for example. That could be helpful in enabling, I guess, greater coordination on this front.
Alan, you've got a lot of work to do, so we're going to let you get back to it. Thank you very much for coming to join us today and sharing all your insights.